evening. Well, that was a lot of information in quite a short space of time, and I'd love to tell you I'm going to be a little bit slower, but I'm not. There's going to be a lot more information coming your way now. I love this quote. I use this quite regularly. So without data, you're just another person with an opinion. I genuinely believe that with the amount of money we have flying around in the hotel performance certainly over the last few years and going forward, opinion's just not enough. And of course, you could spin this to, without an opinion, you're just another person with data. And luckily, we have, of course, expert analysts like HVS. We have, of course, the global brands and some sophisticated operators in the world to combine the two things to help you navigate through what is quite a complex hotel market these days. So who are HotStats? Well, we collect the data, the P&L data from hotels all around the world. I've just completed my 6th year with HotStats now. To give you an idea of the scale, we were sat at around 3,000 hotels 6 years ago. We're now at around 12,000, so just under 13,000 actually now. And I very much spend most of my time guiding investors, owners, and operators through the performance metrics. I guess, as many refer these days, I'm kind of like your weatherman for hotel performance. I'm going to canter through the, thanks for that. I'm going to canter through the slides now. A few of the ways the data is used across hotels these days. And don't worry if you don't get to see the slides exactly. I will guide you through them, and you'll also have them available at the end as well, so no need to take any pictures or anything. So I'm going to spin through from the helicopter view, and there's a few reasons I'm going to start with the helicopter view and then kind of drop down. This is the 2024 performance. The last month we actually published was yesterday. We just published our January data. But I'm going to just take you through last year as a good case in point. So all eyes were actually on this region, on Asia Pacific, because it was the one region of the world that still hadn't quite recovered to 2019 levels. And as we went into the year, certainly China dragging down the performance, with, of course, being a huge market in this region, and still over 10% down on 2019 levels as we stand. The US, actually, we'd seen, as we started the year, early signs that there was going to be this flat line in of revenue, so starting a real slowdown as we've lived on some incredible performance trends over the last few years, some incredible growth. And of course, there's a good reason why we look at TRevPAR, so total revenue per available room, and then next to it in the blue, which is gross operating profit per available room. And as you can see, the two things just don't marry. And as we focus very much on the top line, we focus very much on rooms performance. As you'll see through the slides in the moment, hotels are way more complex than we used to be. And of course, these performance trends are not directly in sync. So you can see at the start of the year, US performance there at 3% growth. Europe, actually, the one trend you'll see for European hotels is that we've been living with incredible inflation over the last few years, certainly driven by energy costs in particular. And as they fell in 2024, so we started to see some of those costs decrease over the year, you've actually seen GOP margins improve versus the prior year, and actually profits grow further than the revenues. So Asia Pacific started really well. Q1 was really, really strong, as you can see from the numbers there. By Q2, you could see profitability had fallen versus the prior year by around 5%. Asia Pacific then in Q3, you could see they had 6% down, and actually Q4 was fairly strong, and I'll come into a bit of detail on that in a moment. The one outlier just seems to be continually the Middle East. Those trends, again, replacing huge events in the region, and again, a few more complex issues such as FX changes and fluctuations, and of course, inflation challenges as well. Overall, the main picture was that the Middle East was very much the highest performing region. Asia Pacific at a macro view, you could see there just around 1.5% growth in profit per available room overall. And Europe there sat in second place at around 7.2%. US was basically flat year on year. And again, entering 2025 with a real challenge on their hands as, of course, we start to see the revenues flatline and the costs continue to rise. So where are we? I like to look at the data in this directional view. Instead of just looking at it constantly like a typical accountant that I am, instead of just looking at the vertical view, we look at the direction of travel to understand what are we going to expect for 2025. Well, you can see, again, looking at the Americas on the top, basically flatline from a revenue point of view. Asia Pacific, actually, you can see entering 2025 also with quite a flat line. And the Middle East and Europe still seem to have some way to go as we enter 2025. The other thing you can take from this is the Middle East was actually sat around third as the kind of profit for available room metric versus the other regions. And now the gap between the Middle East region and the Americas, you can see there, has really shrunk to sit in Middle East above Europe now from a hotel performance perspective. If you haven't seen this graphic before, it's a typical positioning matrix, but you can see on the top right, basically, are the markets in green that have seen revenue growth and margin growth. And these are some of the key cities around the world. In the bottom half and the bottom right here, they've seen revenue growth, but actually profit margin declines for various reasons. And on the left-hand side here, those that have seen revenue declines and profit margin declines. You see some real outliers there as we look at, certainly in California. Now, the reason I wanted to start with that APAC story, which is really, quite depressing and probably fairly surprising for the majority of this audience, is because it's not really the case in point. On the left-hand side, you can see the size of the Chinese performance impact on the wider region. So if we strip the Chinese performance out, you can see on the right-hand side there some really strong performance, certainly in Southeast Asia, and there India just there in the middle there at around 10% growth in total revenue per available room, and further growth of 12% from a profitability perspective. And if you put that in context of the Asia-Pacific performance, this is why I am genuinely saying on a weekly basis, India is the hottest market on earth right now for various reasons. You can see here on the left-hand side, so this was the end of 2019, so the 12-month rolling ending in 2019, and then as we've looked forward now to where we're currently sat, India has taken over the Asia-Pacific average from a profitability perspective. So really all eyes on this country as things currently stand. And if you look at it in further detail, you can see that actually, although the growth in margin was fairly small year on year, we're saying fairly small in the scale of things, if we look at where we've come from, the context, 2019, 40% GOP margin. We're currently sat on average at around 46.5% GOP margin, a size of a margin that most countries would be very envious of. This performance is incredible, and of course, you've seen nearly 50% growth in total revenue per available room since 2019, driving a lot of that. So just jumping into a few of the key cities, you can see actually Mumbai saw a slight tail off in margin, very small, it's around 0.3% of margin year on year. So further revenue growth, so therefore on the bottom line, there's more cash in owners' banks on a per available room basis. When we look at Delhi saw an improvement in margin, an improvement from a revenue perspective. So now we're looking at 48.5% on average as a margin in Delhi. And in fact, if we take it right across India, you can see that the performance, the size of these numbers, if I put them on a chart next to much of the world that has seen really a slowdown over the last 24 months or 12 months, and particularly 24 months, after what's been incredible growth overall. You'd be, again, very envious of seeing this in the key markets across. On the left-hand side here, you can see Ahmedabad there, just around 4% drop from a profitability perspective. Goa there, fairly flat. But on the right-hand side, you can see the size of some of those numbers. They look like skyscrapers in Dubai, right? And again, going into a bit of detail on Goa, because we're in Goa, well, I think there is a question mark. My current question is, has Goa peaked? Did we get to the highest possible level from a margin perspective of 47.4% last year, in 2023? It dropped off to around 46.4% in 2024. You can see some of the metrics again, food and beverage margins, just around 40% on average. They were like the golden days in Europe. And again, my point on food and beverage is that, of course, and as I said earlier, we're not just a rooms business, right? We have these guests are not just spending more on rooms or the average rate of your properties. They're spending more in C&B. They're spending more in food and beverage. C&B, for those who are not familiar with the term, is your conferencing and banqueting, the events at the hotels. Wellness, a real hot item, and many operators around the world considering closing their wellness centers pre-COVID because they were basically cost centers, and there was a real evaluation as to whether this was really a trend going forward the guests were really looking for. Well, I can tell you right now, on a global basis, it's very much a hot item. In India, you can see here around 23% growth year on year. And going back to my point on C&B, conference and events, it's a huge driver in this market. Again, heavily domestic market here. Those large conventions that happen in the key cities can make such a huge impact on the overall business. And there's a few things to take away from this. Number one, India is bucking the global trends. C&B has not been as hot in the rest of the world as it is here in India. It's actually seen quite a lag of recovery, and if you adjust for inflation, the rest of the world has not actually recovered to 2019 levels from a C&B perspective. In India, it's very much the opposite. You see the size of the growth across these markets, and I've thrown some context here for two reasons. Number one, to show that C&B continues to rise at incredible levels. The chart on the right-hand side is showing the last 3 years, basically, so you can see the trend is that C&B is growing each year. But actually, what it also shows is that Hong Kong, Singapore, Mumbai maybe has too limited supply in C&B, something that other markets just don't have the luxury of. On the left-hand side, you can see like Abu Dhabi, Beijing, Bangkok, still seeing pretty good performance, but the numbers, the cash numbers are so much smaller because of the amount of supply in the market. So there's a lot of conferencing happening, but a lot of conference rooms empty at the same time. If you look at the trends going forward, again, as I like to look at it again on that 12-month basis, you can see, generally what you can see, Mumbai is very much the hottest market from a C&B perspective. So you can see it continuing to rise. Goa, going back to my story there, some loss of events, I guess, over the last few years has meant that it's all a matter of scale, right? It's not a huge event market. Now, the reason we need this continued revenue growth, and much of the world is now scraping around to try and find as ADRs start to flatline, as RevPAR starts to flatline, we need those other levers. We need to be able to continue to drive revenues because the size of the cost increases that some of these markets have seen over the last few years, again, is quite incredible. The APAC average is brought down again by China, so as we saw much from the revenue perspective, it's also impacted from a cost perspective, because again, there's been a huge change to the cost base of hotels in China, as there has had to be. But you see India in the middle there, 11.2% increase in labor costs has of course been offset by the size of the revenue increase that we've seen. So if this is probably part of the same story, so as we see more from the top line perspective, we are spending more on the bottom line, but actually what we've seen in the rest of the world is that as things start to slow down, as the revenues start to slow down, the costs actually don't slow down. They continue to accelerate. So, of course, driving that additional spend across the properties becomes ever more important. I'll skip past the labor margins just for the point of time. I think the one thing I'll take from this, I think, is from a high-level perspective, is those regions that really saw a high level of government support during the pandemic actually ended up seeing the not very much change to the size of the labor cost base. And those markets that maybe didn't get as much support from local government actually saw quite a change. You can see the change in Middle East, Africa here, South America, a drop in labor margin versus pre-pandemic. So the hotels reopened much leaner than they were pre-pandemic, and that's very much the story in India. If I put it in a bit more detail here, you can see, so hotels in India are dropping from around 18% just to around 15.5% as they currently stand, and it hasn't moved year on year. So again, that seems to be the new norm from a labor cost perspective, around 15.5%. And if you put it in context of those other major countries, you can see, India, except for Egypt, India is actually sits at the lowest labor margin as a percentage of revenue. And with the size of the ADR growth that we've seen and the continued improvement of the top-line metrics, we can only see that actually will continue to either stay as it is or improve even. Again, from a labor spread point of view, I did this piece of analysis recently for one of the larger investment funds, and actually one of the reasons I like to display this is that it's a time where we're actually rejuggling and looking at the way that we operate hotels. The one trend we've seen in the US and in Europe has been the shift between the labor on property moving from undistributed costs, so from those back-of-house areas that are not revenue-generating and they're not guest-facing, to actually having to prioritize spending the money in the front of house to ensure that we are upselling, maximizing revenues, and of course, driving customer service. So this has been very much a trend. As you can see, the European number there, 25% of the overall pie is back-of-house areas. And if you look at Middle East and Africa and Asia-Pacific, it's around 37% in Middle East and 32% there in Asia-Pacific. I know I'm flying through these slides, but I hope it's interesting for you. You can see this is the global trends that, from a cost perspective. So these are the non-labor costs. The big items really been booking costs, of course. We are living with higher ADRs, so we would expect to have higher booking costs, but it is very much a global trend. Guests are booking online more than they were before, certainly versus pre-pandemic. There are lots of other options and ways of booking, and I think the introduction of AI in the way of marketing may or may not support us to be able to drive more of that direct through the online channels into the hotel. If you look at India, it's actually impacted more than the average for APAC and Middle East and Africa, and again, that'll be the size of the revenue increase in particular. The other items to point out is food and beverage supplies, property and maintenance costs, which have been, again, a huge burden for hoteliers over the last few years. Now, if I look at India in particular, and actually this says versus 2019, I apologize, that's versus the prior year. Again, the most recent trends that we've seen from a cost perspective has been increases in costs in sales and marketing, so driving more into digital marketing, into the way that we now sell to customers. It continues to be booking costs, so it is the costs attached to bookings that is really driving the largest part of the cost increases, and it's more just to be aware of it than anything else. The good thing is that this region, over that time, has also seen very little increase in energy costs, which again is unlike what we've seen in other parts of the world. And then taking it back up to a global level, I thought it was quite interesting to look at the slides, the trends across the various chain scales. So you can see here the ultra-luxury and luxury segment was very much the winners versus pre-pandemic. The other area I'd show you there is the mid-scale and economy segments, or the bottom end, certainly the mid-scale segment there, which again saw the largest increase from a margin perspective, as the rate positioning has been incredibly improved in that area. This side, of course, the luxury hotels generally have a lot more levers, a lot more revenue centers to maximize that additional guest spend. And then if I just focus on India again, the focus service, so there I'm including limited service and select service hotels, and on the right-hand side, the full service hotels. The story here is around 10 percentage points improvement in the focus service hotels on average across India. I mean, this is an incredible stat, really. And again, it continues to be very much part of the story, as we've been able to drive additional spend on the top and protect the cost lines. So just to finish up, so the global revenue growth is slowing, I said in particular in the US, but we're forecasting for Europe this year, we'll start to see that flatlining a bit more. The inflation and currency challenges in South America. The Middle East I didn't get into in detail, but a lot of what was driving the Middle East performance is the currency fluctuations in South Africa, in Turkey, and in Egypt, and also Lebanon. Here you can see CMB growth, as I said, continues to drive, and the great thing about CMB, again, being such a high factor for you, is it's highly profitable, so it drives F&B margin in a way that many other areas of F&B are unable to. We've seen the booking cost increases, as I said. To summarize, across India, hotel demand remains strong and predicted to continue, and as I said from the beginning, I genuinely believe India is currently the hottest market on earth. And on the back of that, I will leave you to it. But if anybody wants a copy of the slides, I want to get in touch. My details are there. And thank you very much for your time. I hope it was useful.